Hello viewers, welcome to Forex Flow weekly analysis for June 29 to July 3rd. If you stay with me in this video for another 10 minutes, we'll be looking at very interesting trade setups for the coming week. Nothing much has changed since last week, but we know that the major US markets have dropped about 600 to 700 points on Friday. So we'll see what impact will it have on the Forex currencies and how we can make this profitable trade in the coming week. So stay with me. If you have not already subscribed to this channel, please do subscribe and hit the bell icon so you can continue to get these videos. Here on the screen, we are looking at Euro USD daily chart. And here we ended the last week with this inverted hammer, and our expectation was that the price will be heading further down to 111, although it did not happen and the price started going up. But this indication here with this orange line around 113.60 was the indicator that the price should be rejected from here, and it looks like it's testing it the second time. If you look at the weekly chart, it's very clear that the price went up here and then we were expecting this inverted hammer, so some traders entered here around 113.50 into a sell trade, and they're still holding their trades, and then the price went down here. Some of the traders closed their trades around this area, and we were expecting the price to head further down to 111, and long-term target is 110. But what we have seen that the price has again made an upward move here, and it's testing this orange line one more time. So the price went up here. There is still a massive selling pressure here, as we have seen that this every time price has gone here. If you look at these four candles here, you will notice that last 4 weeks the price is not able to break above that, and every time it goes up here, then it is rejected. So I'm going to move this a little bit down here to be more accurate here. So I think around 113.50 you can say that there is a strong resistance. There's a lot of selling pressure here and the price heads downward. So with this weekly candle here, now let's look at the daily chart to see how it's looking on daily candles. These last 5 candles, so this is the one where we ended last week, and then this green candle, 2 green candles, and then 2 red candles here, and Friday was like a doji. So I would say if you have not taken any position, stay away from this pair until next week and see which way the price goes. If it goes up here again to this orange line and you see a sign of rejection, like you see a green candle price going up here and then it closed way below, so let's say it goes up here 113.50, 60, even to 113.75 to this Bollinger Band, and then it is rejected and comes down here and close way below this orange line, like this green candle here around 113, then you can easily take a sell position, and this time hopefully the price will be heading downward. If the price goes way up here in the coming week but it closes below during the week on any of the daily candles, then you can still take a sell position. But if it closes above this orange line, a green candle close above this orange line, then we will have to analyze the pair again, and our expectation is that in that case the price will be heading upward and it may go to 114 or 115 in the long run. But in the short run, if you see the price is rejected, you can easily take a sell position and wait for the price to go down, and then our target is still 111, long-term target is 110. If you are a holder of a sell position, I would say you have to be very careful, because you have to put a very tight stop loss right now, because you don't know if the price is going to go up and it can trigger your stop loss. So in the coming week, we'll be looking forward to Monday and Tuesday how the price action works, and if the price is heading upward, then we'll wait for the price rejection around this orange line. If the price continues to go down, then if you're a seller, you can hold your position. If you have not taken any position, you can still take a sell position, because if it goes this time, it should be heading downward to this 50-day moving average coming up here around 111. So this can easily give you about 100 pips of profit. If it breaks below that, then we'll reanalyze it, but long-term target is 110 on the downward side, and on the upward side, if it breaks with a strong green candle above this orange line, then it should be heading upward to 114 or 115. That's for Euro USD. Now we are looking at Pound USD. Here we were saying that the price would be heading downward, and again this is a similar case here, since the USD index was falling down as soon as the markets open on Monday. So you saw the euro and the pound started going up, and again the similar pattern, two candles up, two candles down. But here on Friday, what we have seen, there was a lot of selling pressure here on pound, closed a little bit below the bottom of these two candles here. I would say around, so the bottom was around 123.38, and it went down here and closed around the same level. So this candle is a very strong indicator that the price is now heading downward. On Monday, you will see the price action. Here we have a little bit more strong resistance around this orange line of 124.80. There, because of these two moving averages sitting up there. So if the price goes up here, it gets rejected, then it's a very clear indication that you can easily take a sell position. If you have already taken a sell position, you can hold and lock your profit, wait for the price to go down. Last time we were talking about the range around 122 to 128. So that range is still there, and if you can play it well, I think you can easily make about 200 to 300 pips a week. So looking at here, if the price comes down here, if you're a seller, you can close your positions around 122. If it dips further down and gets support here around 120, you can take a buy position and wait for the price to go up. So again, this is going up and down in this pattern, so you have to catch the pattern here at the bottom or on the top. Looking at the RSI, it's heading downward. If it reaches 20 and you see the price is sitting around this area, you can take a buy position. Or if it goes up and you see the price is now reached to this top around 127, 128, and the price RSI is close to 80, then you can take a sell position. That's for pound USD. Now we're looking at USDCAD. Here we were saying that the price will be heading upward because the oil price is not expected to go up further, and the OPEC has not done enough cuts for July and August. So we were expecting that the price of oil would be staying around $40 to $45 a barrel, and in regards to that, this pair would be going up because USD was getting stronger. So that's exactly what we have seen here. The price was going up. If you are a buyer here, you can certainly lock your profits around this area, around 136, and wait for the price to go up. So currently it got rejected here, or maybe a little bit profit taking happened here with the 50-day moving average coming down. If it breaks above that in the coming week, then the price will go back upward here around 138 with extension to 139.50. The same situation what we discussed last time, that the price is making very small moves here, so it's really tricky for the day traders to make money here. But if you're a long-term investor and you had taken a long-term position, then you can certainly hold it and wait for the price to go up. If it breaks below again with this 50-day moving average coming down, then you can close your buy trades and wait for a strong red candle to take a sell position. In that case, if the oil price is also going up, then I would say you can enter into a sell position, and then this pair should be heading down here back to 133. That's for USDCAD. Now we are looking at gold. Here we were saying that the price would be heading upward because this is a safe haven right now. If people are taking money out of oil or other commodities, then they are investing into gold. So the expectation was that the price would go up, and I think last week I had a orange candle here around 117.50. So this was our indicator. If the price breaks above this orange line, then we would be entering into a buy trade. Although there's a lot of volatility here, so if you had taken a buy trade and put a stop loss, it might have been triggered. But this is currently the situation of the market, and it's really hard to make money when the price is very choppy. It goes up and down and trigger the stop loss. So in this situation right now, it's not easy to put tight stop loss. I would say instead of taking a large position, you can take a small position and have a loose stop loss rather than a big position with tight stop loss. So that can easily be triggered in this market. If you look at the weekly chart here, last time we were saying that we had a strong hammer here, so our expectation was certainly the price would be heading upward, and that's exactly what we have seen. If you had taken a buy position around this, you would have made good profit here. Now coming back to the daily chart here, my expectation is that with this hammer, the price will be heading upward. It may open up with gap as well. Be careful because the RSI is now heading close to 80, and anytime the sellers, because people are investing into gold as a safe haven, but as soon as they find an opportunity in stocks or other commodities, they take money out and immediately invest into those. In that case, the price drops here, and that's exactly what we have seen here. Every time it goes up here, then it drops. So this can also happen in the coming week, but if you have taken a buy position, lock your profits, wait for the price to go up, take your profits accordingly. Now we're looking at crude oil WTI, and here we were saying that the price was actually going to close a gap here. It has barely reached there and really not closed the gap yet, but this is fair enough. Here we can say that with this candle, this was an indication that no, there is a lot of selling pressure up there, so the price was heading downward, and that was the expectation. So if you were a holder of a buy position, I would say this was your opportunity to close and take profit. And then the price has gone down a little bit. Also, this is not moving much, but as you can see now, it's making a bearish flag here. So in the coming week, we may expect the price to go further down, and it can dip down here to $35 a barrel. Also, if you look at the weekly chart for this, as you can see, the June and July contracts were expiring. We have seen that the volatility has reduced because of the capacity that was full, and the gap is now filled completely. So now we can say that the price may be heading downward. If you look at the line chart here, you can see it has made kind of a double top here, and now it can significantly go down to $35 a barrel with the extension to $32.50 in the coming weeks. Be very careful with any news. It can be very choppy again, and you won't be able to manage your positions same way like it happened last time. So I would say take small position, put relaxed stop losses, and then monitor the price action on daily basis, because price action is very important nowadays. These indicators sometimes are not valid when there is a fundamental change, and you have to be relying more on the market sentiment rather than the technical indicators. So with that, I'm going to close. Thank you for watching. Please subscribe to my channel and leave your feedback in the comment section.